Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'm going to be your host for about the next, I guess we'll say 25 minutes today. That's what my goal will be. It's short and sweet. I'm not looking to put on a new trade going into next weekend. The last two trades have worked out well, done very well. The last two that we even just talked about on Wednesday. And so we did a positive trade in Starbucks, positive trade in gold, and a positive trade in United Healthcare. United Healthcare has been our let's go back to the wheel over and over again, and that trade has worked out well. The chart's simple. Things are simple in United Healthcare, and the economy. If there is a perceived weakness in the economy, healthcare stocks have a tendency to do all right. Berkshire Hathaway came in and bought a $1.6 billion worth. And what else? Oh, a bunch of insiders bought a whole bunch of stock, and that had a nice charting pattern, and it broke out of that charting pattern, and now it's trying to fill the gap. So there's a lot of positives that are in there. So let's just rehash that one trade, because there is something interesting going on the United Healthcare trade. And then we decided to take that same type of outlook and look at gold, and kind of the same scenario a little bit. Maybe economic data is making people a little bit scary. September and October, buying some gold. Gold is skyrocketed once again to the upside. It's really had a strong, entire year gold has. And so we decided to do an open wing butterfly in gold, and that trade is already working for us too. So we have those two trades, and that only occurred 2 days ago. And so today, I think I might just leave you with a trade if you want to have a trade on for the day. Now, once nothing's meant to be a recommendation, I always want to emphasize that, even though I say these things, you got to look at your risk profile or your risk tolerance before you do anything inside your portfolio. But I think we'll just do open wing butterfly. We had a lot of success with them on the 0 DTE, so we're going to try to get that one on quick. The VIX index is not too shabby, so we're doing okay on the VIX index. The VIX is coming down. Markets are setting new highs. We've got the S&P 500 index right now at 1 second here. 6,589.97. It's up $2.42 on the day, which is basically flat. And we got the VIX index at 1483. That is, once again, basically flat. So 1464. That's going to make the 1 day butterfly a little bit cheap, mainly because volatility is probably low on the 1 day option contracts. But we'll see. Here we go. Let's show the Tradier Pro software. And right now you see the UNH trade. Now this is the trade that we did set up on Wednesday's show. And I guess we'll run back and we'll look at the chart and we'll rehash what's going on here. That's gold. Let's do UNH. So precipitous drop. News were cooking books, stealing money from Medicaid. Well, that's a strong word, but all these things. Market comes all the way down. Here's where we're at. I'm going to grab from this area on in because this gap is what is interesting. So we came all the way down and hung out here, right? Came up and bumped up against this candle basically on that long day, right on that edge. Came back and hit it again, came back and had the golden cross, but it's only a 20-day crossing over a 50-day. It's not that big of a deal. But if you look in hindsight, that's when the market started to turn, hit right here, and now we've gapped up and we're hanging right here at 30, we'll call it 360. But we still have some room to run, right? The bottom of this gap right here is 376. So our trade is profitable, and it's more than what we can expect if the market stays where it is at. So let me explain. We put this trade on right here, the one that's on the bottom, and you can see that just fine. We have the 19th expiration, so a few more days to go. We're long the 335, short 2 of the 345, so that's our precipice, that's our mountain peak of our open wing butterfly. And then we stop short and we buy the 350. We paid 365 for that, and we are up $2, which is 573 is where we're at. Now, if we're above 350 at expiration, the most that we can make on this trade, the most that it should trade for is $5, which quite simply means that if you buy the 335, go up 10 points, sell 2 of the 345s, and then go up 5 points and sell the 350s, right? We're stopping short. The short spread for this to be a normal butterfly, the short spread would be the same width as the long spread. So the difference here is 10 minus 5. The most that this could trade for is 5. Let's look at the what if calculator. Already have the trade loaded up. And this is showing, right now it's saying we paid $5.73 for it. But if we did actually pay 365, you would see that above here, from this range, that's 10 points. This is 5 points. In this area, it has to trade for 5. 5 minus 365 is $1.35. And that's the maximum that we can make on the trade if it trades for 5. But right now, well, it just moved. Now it's getting close to 5. Of course, I was going to say, hey, isn't this fun? It's 575. Well, if you can get more than 5 right now, I think I would go for it. I think if I could close it out today, and that's the moral to my story, is if we hang around the most and the market continues on up, the most that we're going to get is 5. If you can get 530, 540 or something, you put it in there and it gets closed today, then do it. Just put this order in as you flip the script and you're going to sell to close this for 5, let's say 530. I saw 530 more than once. Now it's trading for 5. Of course, it always does this whenever we start the show. See, you keep seeing that 530 in there. Now, obviously, there's 3 legs. There are 3 bid-ask spreads. That's what's adding to the volatility in the midpoint of this. But here is the other way to look at this is we're trading, what do we got? 7 days. Yep, we're going up to the 19th expiration, so we have exactly 7 days. What if, see what I did there? If the market comes down and actually ends up closing at the 345 strike, and we hit right at that precipice, we don't have to worry until it gets all the way down to here that we're going to start losing money. Basically, under halfway down on our long spread is where we turn a winning trade into a losing trade. But with that said, there's not if all you want to do is set an alert and say, if it gets here, I'm going to get out. So possible. There's still a lot of time premium, and this is the profit and loss as of right now. The green line is. So if it starts coming down within that range, you're going to need time decay to happen. Now realize this is as of today. This isn't Wednesday's chart. It's going to look a little different, but we need time decay to happen. So you'd want it to drift down closer to expiration as opposed to sooner to expiration. Any questions on that? If you have any questions, please do put them in the chat box. I'm happy to address them. Guess what? Let's do a rinse and repeat. This is going to look very similar. We just decided to do it on an underlying called gold, and it's an ETF that tracks gold. That's GLD. Exact same valuations almost. So if on the gold side of things, it's going to be a very similar story. All right, so with gold, we did the same expiration. I'm going to pull the trade 1 second here. Let's pull the trade over here and take a peek at that. 332, 342, 347. 332. Oh, I thought we're up 64 cents. We were up more than that. All right. 342. 332, 342, 347. Okay. We paid $350 for it. It's $367. I thought it was actually up at the 340 level. Did that move on me that much? Okay, 1 second here. Let's zoom in. So here is the breakout in gold, the strong move to the upside. We're anticipating that. I think I'm more neutral than bullish on gold at this point in time, and we centered it right around where the middle strike was at. We needed it to just move a little bit to get up to the middle strike. We're concentrating on where the break even is relative to what we paid, and for the trade overall. Since then, I guess we got up to, the highest that it was recently is 338. That was 2 days, and now we're at 335. Okay. I guess that makes sense. 360, 375. We'll call it 375. We did this for 350, so we're up 25 cents on the trade. I definitely want to just leave this one. We want it to be above 332 in 7 days and drift towards the 342 level. And if we send this to the what if calculator, it's going to look a lot like the profit and loss graph that we just showed you in UNH. So here's where we're trading, right there. Now, notice, first of all, this is a little bit better. We have a little bit better line kind of showing that if the market does start coming up, it's going to start drifting that way because it's closer to the actual price that we paid for it. So the profit and loss graph is a little bit closer, the actual as of today line. And ultimately, that's going to start drifting towards the peak. And what we would like is this to finish up a few more points by the end of the day. And then by the end of the week, next week, finish right up here. And we'd be doing very well on that trade. Okay, 2 down. Let's go look at one more trade, and then we're going to call it a day. We're going to make this no. If you have any comments, today is the day because I only got one more trade for you, and we're going to cover that trade. So if you have it, please do put them in the chat box, and I'll be happy to address. And then let's literally just do a 1-day trade today. OEX. I'm going to be traveling, so I'm not putting this on. I'm actually heading out for the weekend as soon as we finish our show today. OEX. Holy cow. Am I dating myself? I haven't got a quote on the OEX in a long, long time. The OEX was the very first index that was ever created to trade options, put together by the good old Chicago Board Options Exchange. Okay, SPX. Want to double check some things here. So, do we want to lean bullish? Is that we're the market's a little bit flat? Really? We're up about $5. We're at $5.93. So this is a little bit accurate. This is a little bit off. And I've already talked to the powers that be about that on the derived value. But we are up $5 on the day, and it is trading very close to this price. Do we want to lean bullish? We can do it with puts. We can do it with calls. I think I'm going to let's hang with the calls. Let's hang with the calls. It's not a Monday. Let's do the calls. It's going to be a 1-day option contract. So it's going to expire at the end of the day today. And let's see if we can get it done for less than $4. We're going to buy the 65.80, sell 2 of the 65. Oh, got to get rid of this. Okay, I think we just froze. 1 second. There it is. All right. Buy 1 of the 65.80s 2 of the 55.90s and buy 1 of the 65.95s. Yeah, 430, 440, 450. A little bit expensive today. And it's 11:19. So by wasting that 20 minutes, I'm sure I kind of hurt things, but this will be the official paper trade. We'll come back and look at it. We need the market to continue on up. We're right at the 55.90. Yep, 55.91 is the actual market right now. So this will be our official paper trade. We're going to pay $4.50 for it. We're going to hope the market stays here. We're getting out between 2 and 3 o'clock today, doing all the general rules on our 0 DTE. If the market comes down, gets below 65.80, got to think about getting out, especially if the 2 o'clock hour is approaching. After the 2 o'clock hour, if we're within the range or we're above and beyond, we'll send this to the what if calculator. Let's do that first off. And if we're above and beyond 65.95 in this scenario, what if? If we're beyond that range, well, then we're still going to be profitable. We got a only 50 cents on this trade. That's right. Wow, you're going to be profitable by 50 cents because it's going to be trading for $5. We put it on for 10. We got it 5. Looks a little bit better when we can get it done for about 330, 340, but that'll be our paper trade for the day. We'll leave it there. All right. I do not see any questions or comments. Short and sweet. Have a great weekend. See you this Monday for the next edition of Options Guide TV, 11 a.m. Eastern Time, inside the Tradier Hub. Hope to see you in the hub.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.